little bit of a rally here. Wow. There's one thing having a trading plan. The other thing is sticking to it. And we talked about not shorting this market. Holy mackerel, blasting out the new all-time highs. It's the M&M market, Meta and Micron, moving a lot of other stocks as well. We're going to talk retail stocks at 8:35 with Ryan Craver. Talk about the consumer. It's a Thursday. It's pre-market prep. Let's get things started.
Welcome to Benzinga's pre-market prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
Okay, traders, investors, over 5,800, up 43 handles, 58.22. The buck pulling back a little bit, down 23 cents, 100.39. TLT in the starting to get a bid here, just under 98, up 33 cents, 98.16. Crude back under 70, down $1.88 at 67.80. Gold is shining here, up 20.80, new all-time high at 27.05.5. Silver up 89 cents at 32.90. Bitcoin doesn't want to be left out, up $1,365 at 64,950. Let's bring in Triple D and AB. And Dennis, yesterday you just told us, like, how can you be bearish this market?
Yeah.
It's just, what is the bear case? And man, oh man, what a market we have today.
Yeah, I mean, the setups here is not good for the Bears. We talked about this already yesterday. I mean, now you pop 40 points. So probably the buy was ahead of yesterday, but you didn't know the Micron tape was going to be like that. You didn't know China was going to rip overnight. But it's just not a great setup for the Bears. Like, if you're talking about recession, you're talking about it's coming, it's coming. It was a year or two ago. We're just repeating what we said yesterday. But when they started raising rates, that was the time to batten down the hatches. When you're now battening down the hatches and they're lowering rates, I think you're doing it backwards here. I mean, it's just no reason at this moment in time to think that we're just crashing and burning. I mean, valuation is not that attractive, but it's fine on a lot of stocks. It's just not attractive in the AI stocks, but it doesn't matter. Story is still hot. They keep going. What I've been saying, I've said this multiple times, I think we go out this year the same way we went in, with tech leading the way. And look what we have overnight here. Tech leading the way once again. AB, what are you thinking?
Yeah, I mean, it's like you said. I was saying that when there were people that were, scared that a 50 basis point cut would spark fear in the markets, and I was saying, I don't think so. I mean, the market's at all-time highs, then you're getting rate cuts. It sounds like a pretty good situation for stocks, and that's proven to be the case, at least so far. We've only been in this market now since the announcement of the rate cut for about a week or so, but all things good so far. And yeah, like you mentioned, overnight tech rallying. You had Micron's earnings, which came out yesterday after the close, and just across the board. I mean, the top line numbers were just in line pretty much. Okay, EPS came in at $1.18, beat the $1.13 estimate, so beat by 5 cents there on EPS. Sales came in at $7.75 billion, beat the $7.63 billion estimate. So that beat by about $100 million. But then the guidance was, pretty strong there. So the guidance came in. They see revenue at Q1 at $8.7 billion, EPS of 166 to 182. So that was above the estimates. And the market liked it. Stock is up $16 here, or 16.6%. So pretty big move here in Micron. You mentioned, Joel, that it's moving some other stocks too, whether you look at Qualcomm, ASML, basically any chip stock you want to look at is in the green today off these Micron earnings. NVIDIA up another 2%. So NVIDIA's at 126 now, inching higher back to that all-time high of 140. So across the board, you just got to rally in tech, and no surprise in what part of tech here in the chip stocks.
As soon as that Bloomberg piece came out on NVIDIA that said Jensen Huang was done selling, I think it was Bloomberg, it was green light go. And you can set up technicals and you can look at these trades, but information moves stocks way more than charts. Information builds the charts. And when you saw that information come out, that was 2 days ago, they started buying Nvidia and they haven't stopped buying it since. Because we know these whales sit there perched, dumping. Stock's hard to go up when the whale's there. Amazon, 200 basis
Yeah, I
level,
was just
can't
going to
go up,
mention that.
can't
Yep.
go up, can't go up, can't go up, can't go up. Nvidia, 120, can't go up, can't go up, can't go up, can't go up. Jensen Wong down, gone, boom, can go up. Oxy can't go down, 57, can't go down, can't go down, can't go down. Buffett buying, Buffett buying, Buffett done buying, can go down. So I mean, it's so important to understand these levels. It's why I wouldn't be buying Bank America today. You know, getting back up to $40. He's still got the whale there. Can't go up, can't go up, can't go up. If it moves and you know he's done, then you know you could get a green light go. But it's just understanding those whales and how much they hold price down or hold it up. In the
Yep.
case of the Oxy example, that's what you've got to understand. As soon as they said Jensen Wong was done selling for now, they've been buying Nvidia ever since. And now obviously the Micron, news where, it kind of wanted to go. I mean, it's been beat up, it's been a laggard, it's down from $160,
Wow.
like $10 next year. Again, it's cyclical. But I mean, you look at the PE on this thing trading 9, 10 times next year's earnings. It's dirt cheap. Again, it's cyclical, so they could end up losing money, 2 years from now or 3 years from now. Maybe some pull. Lots of things to think about. But it's a huge pop. 111, 112. I don't even know what to say. This market is once the stock gets going in one direction, sometimes it's hard to stop it. Like you were saying last night, Joel, 105, 106, so probably just buy because it's probably going to keep going at least to that 110 resistance. And
Yep.
it does.
Wow. I think you just got to wait for the pre-market. I mean, I can't we talked a little bit about it, the setup and, how things were open to the upside. They just blew it away with the guidance. I mean, keep an eye on the pre-market high and try and find a daily high that coincides with it. Right now, the next daily high that I see on the board is 115. Oh no, 114.04. I can give you that. I'll make that a 1 star. If you're looking to get out of this today, because this is probably way over the expected move, you just got to kind of layer it. I mean, if you want to sell today, and I am not recommending selling, I mean, throw a little bit out there at 112. I'll see what happens. Throw a little bit more out there at 112 and a half. See what happens. Throw a bigger piece at 113. See what happens. I mean, that's the only thing. That's if you want to sell today. Up $16. I don't know what the expected move is, but
I'll find out what it was.
yeah, but man, you got
It was about.
ASML.
It was just under $10. It was $9.50. So it was a
Really?
serious expected move, but it's a serious move here, and you're through the expected move here now by $7 roughly.
Oh,
Wow, I don't know what to say. I mean, I actually did sell half because I was nervous going into the print. I kept half through. Happy I did. I was like, I'll be happy either way here. If you're a glass half full type of guy, if it goes down, you're happy you sold a little bit. If it goes up on the print, you're happy you still held half. So still in, and that was the purchase from 87, $88. I mean,
yeah.
the one trade that was there too, and it was the undercut and rally, like where we
Right
were
here.
talking about that 85 level, and they went under it to 84.12, and then
We
it's been
talked about
straight
it
up
that
ever
day,
since.
Dennis. We
I
talked
set it
about
up.
it.
I said below 84, you got to stop out. It almost got there, 84.12, and it didn't get there quite within 12 cents of where I said you should stop out, and it didn't get there, and then it
What
just
day
turned
was
around.
that? That was September 12th.
84.12 was September the 12th.
Who
September 12th.
I think someone was it a downgrade? I think it was a
Yeah,
downgrade.
it was, and they really washed it out that day. It was down $6 or $7, and that was just a buying opportunity. The classic Gil Morales undercut and rally trick. It popped back the very next day, meander a little bit, and then you had the classics. This is all tech. This is all just our strategies. You had the classic run up ahead of the event. I was playing it long for the last 3-4 nights ahead of the event. It's up every morning. Just flip it out long. Buy it, close, flip it out in the morning, make money. Buy it and close, flip it out. Sometimes even after hours. Like sometimes it popped up like $1 after hours. So every single night, I think it was up like 3 or 4 nights in a row. So it's just perfect trading. That's right from my textbook. So all of this just really worked out well.
So so it was a downgrade by BNP Paribas. They did it.
and it was down
Okay.
$6 or $7
Yeah.
that day. Just ridiculous. Just ridiculous. They bottom ticked it, Joel. They bottom ticked it. And they're
So I
looking at it
never
now.
knew what the BNP stands for. Do you know what it
Is
stands
this gonna be
for?
a joke?
No, it's not a joke.
Oh,
It's not a joke.
I don't know what it stands for now.
Banque Nationale de Paris.
Oh, there you go.
Yeah, I saw that all over the place, and I asked my niece, and no, she doesn't live in Nice, and she told me that. I've heard that so many times, but
I didn't know that.
wow,
Oh, we learn something
Micron,
new every day.
ASML on the move. Wow,
Every chip stock, AB.
Telecom.
It's just chip, and I always do the chip wreck on the downside. I guess it's chips for everyone. I mean, they are just like, I'm looking across the board. Micron obviously leading the way up 16%, but it's not just Micron. It's all Applied Materials is up 6% here. Huge move for Applied Materials. LRCX is up $47, 6% as well. Qualcomm ripping, AMD ripping. I own all these stocks. I own Qualcomm, I own AMD, I own Nvidia, I own Intel, which has been the worst of it. It's even getting a pop here. My Intel, I'm only down like $8 in it now. I'm slowly coming back, but I sold some of the
LRCX is coming into a split. I don't know when the date is on that.
Oh yeah, that's right.
Yeah. Yep. All right. In
Arm
smelly and
Holdings.
getting into
Dell, SMCI. It's like the Micron did good for me, but I think the sympathy move I make more on because all those other tech stocks I got are ripping too. Huge moves.
All right, so you've got the Micron earnings moving all the chip stocks. That will be a story to watch and a sector to watch as we go into the open today. Let's keep it in tech for a little bit and go to Meta, which is trading higher and I believe at new all-time highs here at $578. Of course, the company's Meta Connect event is going on. Yesterday, you had Mark Zuckerberg and other executives announcing new updates for its AI, new product updates. They announced a new Meta Quest and a new headset called, or new glasses called Orion, which I was watching some videos, actually wrote an article about this yesterday. So basically the Orion glasses are similar to like Apple's Vision Quest or Apple's Vision Pro in terms of what you can do. The difference is instead of like a bulky headset like Apple's, this actually just looks like a normal pair of, Ray-Ban glasses. And you can look at browsers, watch videos. They showcased a thing where you could essentially FaceTime with someone, but it looked like they were a hologram right in front of you talking to you. I honestly, watching this and writing the article, I was like, this stuff's cool, but I didn't once think like, oh my God, I need to get this. But either way, it appeared like the market liked that and the rest of the announcements Meta was making because the stock was moving up during the event yesterday. And then Meta got an upgrade this morning. So you've got kind of two headlines going on at once. Stock is up about $10, almost 2% here this morning. You even had NVIDIA CEO Jensen Huang highlighted in one of the videos wearing the Meta Orion glasses. So they were pulling out all the stops here when they were announcing this stuff yesterday. So I believe that conference or event is still going on today. But again, I guess the market likes the announcements.
Just look at that, 1:30. This is when they started talking. Look at this, 1:30.
They just rip it. You got to know when these companies are speaking. Obviously, everybody knew this one, but there's little ones too. We got to know them all. Get the master list, folks. Benzinga, you got to keep working on that behind the scenes. We want a master list of every single company that's speaking anywhere. It's going to be really hard to do to know all those, but we need to come up with that. That is actionable ideas. You got to see the lemming train here, Joel. So I've got price target. This is all from this morning. Price target, JMP Securities raised to 635. Citigroup reiterates buy rating. Oppenheimer reiterates outperform. JP Morgan raises price target to 640. Baird raises price target to 605. Stifel reiterates buy rating. Rosenblatt raises price target to street high $811. Oppenheimer reiterates outperform. All this morning. The lemming train is full on blasting on this stock.
Are you trying to get me to short Meta here? Is that what you're trying to do?
I'm just saying.
Oh my God, that's the most bearish stuff I've ever heard of.
$80 in 10 days,
God.
and now all these analysts continue to just.
Oh boy.
The analysts, our guest said it yesterday, they chase price, and we've said that for years. They just chase price. I mean, we have some great analysts that are, make calls and, kind of, out of the, a little bit out of the norm, contrarian call we like, but these lemming calls like this morning is just nauseating, really, that they have that many. And this is what I'm waiting for on Tesla. Like, I bring it back to Tesla, but I'm like, all those analysts, there's 14, Brentster looked at it, there's 14 sell ratings on Tesla on the street. 14 analysts coming with sell. Just to give you perspective, analysts don't come out with sell ratings. NVIDIA, 0 sells. 49 analysts covering it, 0 sells. 14, I asked Brent, he covered the Benzinga news desk for the better part of, 12 years, 14 years. I asked, how many times have you seen a stock with 14 sell ratings? He said, I've never seen that before. Unprecedented. They absolutely hate it. Wouldn't it be just hilarious that they all have to start capitulating? Because you got, like, obviously Gordon Johnson's down at $27, which is ridiculous. But I mean, wouldn't it be like the driver of price? If you saw Tesla going like 275, 300, they're like, oh, well, we raise the price target. Oh, we better go up to hold. Ooh, we better go up to hold. And every time you get that upgrade, it pops there.
Why don't they just not say anything? Just kind of hide under their desk. I mean,
well, that's what they're doing right now, Joel. The UBS guy that came out and reiterated his sell rating on Tesla, whoever it was, back when it was 215 or 220. Remember, it sold off that day on the UBS guy. And now here we are a week and a half later, and it's 260. He's hiding under his desk. If it's a he or a she, I'm not sure who it was, but they're hiding under their desk. So, I mean, they chase price, and you got to think if Tesla can continue to climb. And again, are we running into the robotaxi event? Yes. This is the classic run-up that we talk about and we trade. There's probably no strategy that I make more money in out of all my books of strategies, and there's a ton of them. There's probably none that I make more at. I've never sat down and added it all up. None that I make more at than the classic run-up ahead of an event, the classic run-up ahead of an earnings, the classic run-up ahead of, the hurricane trade. We could talk about that too. The classic run up on robotaxi event. Like, that's happening like right now. It started.
It's market environments too. And this is one favorable market environment to be doing that in, right? I mean, there are, and that's the thing is that, the way you put it, step on the gas and then take it off. I mean, like right now, I mean, even in negative environments too, it works, but it doesn't have, the same kind of effect. But it's, it's all about timing. And right now, I mean, what better environment could it be in?
When does Tesla report? Okay, so Tesla reports after the event on October 16th. So, well, I don't know, Dennis, because you mentioned earlier in the show that, valuations here aren't that attractive. And if you look across the Mag 7 stocks, I mean, Tesla has probably the least attractive valuation.
100%.
With a
if
forward
you look at just earnings. 100 times earnings.
Yeah.
71, I think, if you look on the forward. 71, I think it is. It's 100 on current.
And I mean, it's hard because Tesla has so many units of the business. But if you're looking just at the automotive part of the business, then there's a growth question in addition to the valuation question. So, like, I think if you're an analyst going out there and you're somewhat worried about the valuation of big mega cap tech stocks, and you look at Tesla and you're like, okay, well, this one is the least attractive out of all of them.
That's why that's exactly why they've all got sell ratings. They don't care. Gordon Johnson said himself, like, he doesn't give any value to robo. He doesn't give any value to full self-drive. He doesn't give any value to humanoids. He values the car company component at $23, whatever his price target is, and that's it. I mean, is that the way we do things? Is that how you value stocks? Is just zero. If they don't make money, that's worth zero. So you might as well take every single company that doesn't make money right now and say it's a zero. Does that make any sense at all?
I don't know how long. I mean, you mentioned the UBS.
Sorry, but I don't think it makes sense.
You mentioned the UBS analyst with a sell rating that was recent, but I don't know how long some of these 14 guys have had sell ratings on it. But if you said you were underweight Tesla, a year ago, and in the last year Tesla's up 5% and the market's up 25%, then you're kind of right on that you were good being underweight Tesla because it's underperformed the market in the last year.
Yeah.
But all right,
I don't care about past performance. I care about where a stock is going, though. And I just think there's so much writing on the wall. Again, this is a bet on full self-drive, though. So it's not anything else. Right now, if you're in a short term, it's a bet on like just run up into the robo-taxi event. So I think you're getting that. Are we going to lighten up ahead of the event, like October 9th ahead of it? I don't know. It depends on where the stock is. If it just goes hyperbolic where it hits $300 ahead of it or something, then you got to think about, wow, that was a huge run up ahead of the event. But as of right now, I mean, you can look and people analyzing it just on the numbers. But remember, this company wasn't always just making, what is it making, like $2.12? It used to make $4 as a car company. Those earnings have been suppressed because of interest rates being high. Interest rates are coming lower. People probably gonna buy more cars. People probably gonna buy more Teslas. Interest rates coming lower
Did you see
is
what
not
they did
necessarily a bad thing here for the stock.
Did you see what they did to GM yesterday after like the second downgrade? Jonas really got that going, one day and then another day. So we'll see, because you talked about this yesterday. You're like, well, you can't get full out bearishness
No.
because, of the interest rate situation. But you know what? It's been 22 minutes. And don't we have breaking China news, or did we already have this news on Tuesday?
Well, I mean, so we got the news on Tuesday that China was, announcing new stimulus measures, lowering the capital requirements for banks, which means that basically banks can release more money into the economy, thus helping to try to kind of spark a economic resurgence in China here, and then some other specific measures regarding the, property sector here in China, which has, of course, been a big question mark. But then overnight, I think we got some more clarity and some people that were speaking over there. So I'll give you the exact. So President Xi Jinping and China's top leaders called for sufficient fiscal spending measures to stabilize the property sector and forceful rate cuts. So that was the language used overnight. Forceful rate cuts, signaling a growing urgency to kind of suppress the country's growth slowdown. China is also considering injecting up to 1 trillion yuan, which is 142 billion US dollars of capital into its biggest state banks to increase their capacity to support the struggling economy, according to people familiar with the matter. So it's the same story. I think we just got some more clarity about the specific numbers overnight. And then it's also, I mean, like, you just talk about the vibe shifting in China right now. It's like the vibe has now shifted from, okay, the economy is slowing down, to now the government is going to be a little bit more business friendly, is going to do whatever it can to pull some quantitative easing and try to get things going again, which, I mean, it's twofold when you look at the reasons why, BABA and all these stocks have been suppressed for so long. Of course, on one hand, you have the geopolitical risks and the Taiwan and all that. And then on the other hand, you have the unfriendly government to businesses. So if you start, taking away that risk, then you're only looking at the Taiwan risk. And BABA now up above $100 for the first time since April 2023. So it's been more than...
We're back, AB. We're back.
Look at that.
AB, you're back. You still
guys
holding?
are... Oh, man, you know what the next
AB's in it for the long run.
The next big catalyst is going to be for China? Are you guys ready for this? When Powell steps down, he's going to go to China. And he is just going to keep greasing the pump over there. They're taking them right out of our playbook. Mad, just flood the liquidity. Jerome is going. I was looking at this BABA chart yesterday. And look at the long you can have consolidations, right? And even this is a monthly chart in BABA, a stock that was once a $300 stock, plus 300. You had a monthly ranges of like less than $10. Look at that. And now it's a solid breakout. I mean, you do have a couple monthly tops. This is, we're above that. We're above the pair highs at 101.50. Two targets for today, 158. Well, you already hit that on April high. March high for today, 104.39. But those are stupid numbers if you're talking about a major retracement in this stock, right? I mean, those numbers don't even come into play. I mean, a 50% retracement here would take you to 188. Unbelievable move there, Baba. And then let's just rip through the other ones here. Hey,
Yeah.
Dennis, we do have some numbers at 8:30. So,
Go
we're
wide.
talking all rosy and everything, and the whole world could change at 8:30. We have durable good orders.
jobless claims, GDP revision. You have durable goods minus
Yep.
transportation, durable goods orders. And then that's all at 8:30. So again, the initial jobless claims, GDP revision, those will probably be your two biggest ones, but then also the durable good orders. After 8:30, starting at 9:10, we have a
Oh.
slew of Fed speak going on. So you've got Federal Reserve Governor Adriana Kugler and Boston Fed President Suzanne Collins speak together at 9:10 a.m. Then at 9:15 a.m., you have Federal Reserve Governor Michelle Bowman speaking. At 9:20, you have Federal Reserve Chair Jerome Powell gives opening remarks. At 9:25, you have New York Fed President John Williams speaks. Then at 10:30, you have Fed Reserve Vice Chair for Supervision Michael Barr speaking. Then Lisa Cook, Federal Reserve Governor, at 10:30. And then at 1 p.m., you've got Neil Kashkari, the Minneapolis Fed President, speaking with Fed Vice Chair for Supervision Michael Barr. So I don't know where all these people are at, if they're at the same conference, if they're at different things, but they're all speaking today. So there will be some headlines coming out with that.
Oh, man. Oh, man. Wow.
The China trade feels like it's different this time, but every time we feel different and it goes back down. So I'm like cautiously optimistic here. I'm long Baba in a full-size position. I'm long BIDU in a heavier position. I think I'm bigger than a full-size position in BIDU. I'm averaging like 101, so I can't believe it. I'm back. Like 3 days ago, this thing was $85, and all of a sudden, boom, I'm whole, which seems ridiculous considering, that we just rallied like 17% in 3, 4, 5 days in BIDU. They're big moves. I mean, if you're coming in here buying it now, you're late to the party for sure. But I mean, we know this market. Stocks start going in one direction, and they can continue to do it. So look back to July in BIDU. Went from 90, had the big day up to 95, and then boom, in 2 more days, 105. So I think 105 is a logical price target for BIDU in the short term here, where you got that double top, Joel, back in July. So, you are going to run into some resistance here up here, on some of these stocks. So if you're in these and you take profits on these, I won't argue. Even Baba, you had the 102.50 back in July of 2023, 104. I mean, you're running into some resistance up here.
Look at Pinduo. Look at Pinduo.
Yeah, you're trying to fill a gap. Like the gap of that you'd think would never fill. Here you are a month later, it's trying to fill. This goes to show you all the evidence points to not the bear case. The evidence continues to point to people are underinvested. They hate the market. They hate the valuations, and they are on the wrong side of the trade. I've been underinvested. I had, obviously a lot of
829, Dennis. 829 and 28 seconds.
What is the numbers today?
Jobless claims, initial jobless claims, durable goods orders, and the GDP second revision for Q2. So the GDP is supposed to come in at 3% for Q2. We'll see if that revision.
Well, I'm going to stick with you here, and if it goes crazy, then I'm going to get away.
I got no numbers for you.
Crazy.
Pre-market
If we dip, they buy the dip, I think.
Oh.
If they dip, they buy the dip. There's just too many people who are underwater here. I think dips are going to be bought until we get some major geopolitical risk or something like that, or inflation starts to creep back in. That would be the game changer. But, as jobless claims, if we get a dip on jobless claims, which we're not even going to get a dip, it doesn't look like. But if we were to get a dip, I think that's not the number that they're going to be scared of. You know what this market would be scared of? What could get the bear thesis and get me thinking more bearish? Because right now I'm thinking rah bull. I have been for a while here. What would get me more bearish is if we saw inflation ticking back higher. Because then they'd be like, oh crap, this is not, we can't keep lowering rates if inflation's going to come back in. We have PCE Friday. I don't think PCE is going to be hot. I don't think we're at an environment where the 50 basis point rate cut has impacted anything yet. What's the number, AB?
Initial jobless claims came in light, 218,000 versus 224 expected. I don't know why they do this, but the core PCE prices, I guess, come out the day before. The rest of the PCE numbers come out tomorrow. but that came in line. Durable goods orders for August came in at 0.0% versus negative 2.8% estimated. GDP came in line at 3% versus the 3% expected. Joel, wait,
I think it's a nothing burger.
That
looks
was
like a nothing burger.
Joel, that was the dinner.
Joel's on mute.
Didn't you bet a dinner you weren't going to do the mute trick? One more. He's still on mute.
He doesn't even know it.
I didn't do that. That was my mic. I didn't do that.
Oh, okay.
That was AI.
Ah,
AI did that.
is the way I move my head, and he didn't take the bet. We matched the high at 28.50. So if you want to make that half-star resistance, 1-star resistance, that's what you got. Leaking a little bit, but looks like you got some bids in there. So a nothing burger, Dennis. I hope you didn't pull all your markets.
I did. Now I got to put them all back out there again.
Yeah. Well, just put the bids in there. Don't put the offers in.
So they give you a little taste of PCE today, and then tomorrow we get a bigger taste. That's how they do it, AB. Because PCE is tomorrow, right? Like we got a PCE number, and is PCE not tomorrow too?
Yeah, no, PCE is tomorrow, but that's happened the past few times they've reported.
They give you a little taste.
I guess so. I don't really know.
Appetizer for the PCE. So this one was in line. That's going to do nothing to change the Fed's course of interest rate cuts. As long as we keep staying in line on these numbers, 0.1 hot, probably fine. As long as we don't start looking really hot. But I mean, it's kind of inevitable, don't you think? Like if we, and again, staying bull, but I'm just looking into like next year. It's kind of inevitable if they keep cutting rates at all-time highs. Eventually, inflation's going to creep back in, isn't it? I think inflation's just not, and inflation's already there. They just don't measure it. They just don't measure it, so they don't care.
What do you mean?
You know, like shrinkflation, again, I can go on the rant there. We could talk to Ryan here in a minute. But, shrinkflation is just out of hand. I'm looking at stuff like pulling out of the package. There used to be 6 bars in my granola bars, those granola Kellogg's bars. There used to be 6 in there. Oh, there's 5 in there now. 5.
I mean,
CPI captures none of that, folks.
But I don't think you can say
they capture none of that.
I don't think you can really fairly say that just because rates are going lower, inflation is going up, because basically all of our recent history outside of the COVID times, which have like the specific supply chain issues that led to inflation. I mean, we had 0% interest rates from 2010 to 2020.
Forever,
and there was no inflation problem whatsoever. And there's a lot of explanations as to why that is. But I think a lot of people think lower rates equals inflation going up, but that's just hasn't been the case in not just here in America, but you look at Japan or wherever. So I don't think, unless you have other factors coming in, I don't think it's safe to say that just in a vacuum that 100% inflation is going up.
Here's the issue, is that the consumer has come to expect prices to go up. We didn't expect it in 2012, 2013, 2014. The consumer is more accommodating to inflation now. When they know that you're going to continue to buy it when we take a granola bar out of the thing. They know that. And again, because they cook the books, I'll say it, I'm the only person that says it, but they do. Remember, we went and looked at that, shrinkflation report, and the Bureau of Labor Statistics says, yes, we absolutely do care. We absolutely account for shrinkflation in the CPI. And then we looked, and they estimated to be 1% every 100 years. And I was like, I'm done with all CPI data. It's all really bullshit, 100% bullshit. It's just a matter of that's what we've got. So the markets look at the bullshit numbers, but it's all bullshit. You think inflation?
Could you say that again, Dennis?
It deserves a swear word. It deserves a swear word because it is. It's BS. Okay. The CPI is all BS.
All right, hey, let's talk about the consumer with someone that tracks the consumer and the companies that sell all this good to us. Ryan Craver, Commerce Canal. Let's talk retail.
All right, let's bring Ryan on.
Ryan Craver, our retail expert from Commerce Canal. How is it, man? Are we wearing matching shirts here? You got a Tigers shirt on too?
I don't. But Dennis is fired up. Let's talk about.
He's swearing. He never even swears. He's cussing and swearing on the show. Yeah, do you think the CPI data is real, Ryan? I'm going to ask you. Do you think they account for everything in there? and they've got it all perfect, and it's really, inflation is really only 2.8% right now. Do you really feel like it's 2.8%?
Absolutely not.
Absolutely
Especially within food. Food especially, it's
crazy.
rampant with shrinkflation. Rampant.
The shrinkflation's out of hand. They've now stopped raising prices. They just make the product smaller. That's where they're doing it, because they know the CPI doesn't account for it too. Like, they don't do it right.
Agree.
So.
Totally agree with you. And I think the one major benefactor, well, two, is Walmart and Costco. So they are the ones that are seeing a large percentage of growth because food continues to grow in terms of price and shrinkflation. So they're making more yield on, a smaller package, and then they're also increasing the frequency with which they purchase it. So everyone talks about trading down, but it's trading down only in size. It's not trading down an actual brand within the food sector.
So does this party in Costco, Walmart continue? Because we got all-time highs at Walmart. Costco is basically on all-time highs, actually due to report. Costco's reporting tomorrow night. So is it tomorrow night or tonight? Actually, it's tonight. Costco reports tonight. So what do you think, first off, ahead of the Costco report? We'll throw you under the bus here. Try to predict the Costco report for us, Ryan.
I think Costco is going to continue to show stable numbers. Now, remember, Costco is held up by that big moat of the membership base that is 90+% renewal rates. So I think to short-term trade it, I believe it's basing again. Keep in mind, this thing, every time we've spoken about it, trades at a premium, right? Like it's at a very high premium. If you're going to hold Costco longer term, I think it's definitely a buy, but longer term, I think just trading it based on earnings wouldn't make a lot of sense. The great thing about Costco right now is their international story continues to perform. Largely saturated in the US in terms of store base, yet they still are growing their comp sales, but the international play is still going.
Where are they growing internationally?
So for the most part, it's crazy, but they have an extreme success story in China. They're also picking up a lot of market share within Australia. Australia is a small market relative to the rest of these markets, but they're doing really well. They continue to perform really well in the UK. In Canada, arguably them and Amazon dominant, continue to steal market share from Walmart. So their model works.
Have you seen that? It's not going to work in Paris. I'll tell you why. Because all the apartments and everything is so small. Like when we go to Costco, you buy all this stuff and you need to, you need to store it. I mean, it's just those small places. But Costco, due to report, just before we get more into individual stocks, we've been talking about the consumer, and Dennis just said, hey, we've accepted inflation, and whatever rate it is, if the smaller packages, I mean, you deal directly with the people that sell to the consumer. Are they just like, hey, let's just keep the ads out, the money's rolling in here, or is there any caution in like the ad spend?
There's definitely some caution in the ad spend. So we have seen a number of brands pull back on the ads that they're pushing. With that said, if they aren't pulling back, they're moving a lot of it over to Amazon and Meta. So they're pulling from Google. Is generally what we've seen. In terms of top line weakness, we have seen it in certain pockets. Home continues to be relatively slow. Apparel is not slow on a unit basis, but a lot of people are trading down and playing in brands that are a little cheaper. So the branded plays are having a little bit of difficulty, but food continues to be incredibly strong. We see the restaurant services still stealing share of wallet from the tangible goods.
What about the dollar stores?
Dollar stores, pretty rough. Department stores, pretty rough. If we look across the major retailers, the ones that I still see pretty good outlook, Costco, Walmart. I think Amazon is going to be tough on the top line, But I was just at their Seattle summit last week where there was thousands of sellers. Their services play is just amazing right now. So they're trying to take more and more share and supply chain services from some of the warehouses and things like that, doing really, really well. I think if we start to look outside of those top three, there are a couple of names that it's going to be interesting to see how their earnings come out. TJ Maxx, Ross, Burlington, Ollie's, all those value plays, but I would steer clear of anything in department store and in dollar store.
There's such a separation, and there always has been, maybe, you know, with off price. Like, you've talked about this for years coming on our show, Ryan, but I just look at like all the department stores that years talk, like Kohl's and Nordstrom and Macy's, and all those stocks are in the gutter. Then you have Dillard's, which just, you know, always defies gravity to a certain extent. But like you said, TJX, right up near all-time highs. Burlington still doing well over the course of the last year. Off-price retailers still doing well. That trend just continue?
It does continue. So I don't want to simplify retail, but it's basically once you stop growing your store count, you no longer have the growth story. Department stores have continued to cut and cut and cut and cut in terms of their store base. I think we're even starting to see some difficulty in names that have slowed their store count. So like the Five Belows of the world, but the TJ Maxx's, the Ross's, the Burlingtons, they continue to open new stores and continue to enrich the store base that they have now. A lot of what people have been scared about them in the past was that they have no e-commerce story, right? None of them are selling on e-commerce, but we can see that off-price is incredibly strong. People are going into stores and are buying. There's a few turnaround stories that are pretty, you know, interesting, like the Abercrombies of the world, but
Yeah.
I don't see anything within the department stores or dollar stores that looks compelling.
What about Nike, Ryan?
Ooh. You know, so I've been looking to bottom feed on Nike, Starbucks, and Lulu.
Those are the three. Those are the three like household retail names that have been beaten down. That I've also been looking. I mean,
Not Starbucks. Not Starbucks.
Well,
Starbucks got beaten down.
Starbucks got slammed, and then they got the new Chipotle CEO, and it popped. So I've no longer thought to pull in a position. I think the difficulty with Nike is right now they have zero growth story, right? They got On that's kicking their ass. They got Alo, which is now pulling into shoes. They've got Hoka, which continues to perform relatively well. They've got no secondary brands like they did in the past to try and propel them forward. So I'm looking at it, but I was looking at it when it was down in the 70s. Now that it's popped with the optimism of the new CEO, I think it's difficult to take a position now until he comes out with kind of his story. I think they cut too much by, you know, pulling out of all that wholesale. So I just don't think the story is there just yet. Lululemon to me still looks interesting despite the competitive set.
Is there a turnaround story here?
There's a turnaround story if they can push international. International is just so small as a percentage of their overall business today, but I think that that's what we'll start to see the CEO lean into, as long as he can, you know, make a compelling statement of how he can grow that business. I'm continuing to look at it. It hasn't seen any pop yet, so I think that one's really interesting. The one other one, and this one is always controversial when I bring it up, is Target. I still think that Target, CEO Brian Cornell, I know he's loved by Wall Street. I think there has to be an activist play at some point that propels it forward to say that, you know, they need turnover in the C-suite. I just think it's time. I think someone else new needs to come in and, you know, whether it's an Elliott management or someone like that to come in and say, look, we need some sort of activism on that stock.
What about like a Revolve? Ryan? Do you think you know, people are really buying more of their clothes from the Temus and the Sheins of the world? Is that cutting into companies like Revolve or, you know, even like an Aritzia or something like that?
Yeah, I think there definitely is some of that specialty, the Aritzias of the world, Revolves of the world. We saw Stitch Fix's numbers; they were still terrible. We saw Rent the Runway's numbers; they're still terrible. So I think there's always going to be, the nice shiny object in terms of products and or services that will start to seep some off. With that said, I think that I probably wouldn't play them longer term. I think you'd probably stick to the majors that we've been mentioning early. I think there's probably some plays in consumer that look interesting. So I don't know if we've ever talked about Celsius Holdings.
Oh, let's go
CELH.
there. Let's go there.
So CELH, from our market share data that we're pulling, they are definitely losing share on Amazon. They're fighting hard against Red Bull. They're fighting hard against Monster. Yes, they've got the number one spot, but they're clearly having difficulty with Amazon. Amazon's one of their largest retailers that they're selling now. So I think Costco numbers should be interesting tonight to understand how Celsius might play.
Okay.
I've been looking at that one since it's dropped, but clearly they haven't shown any base. I think there's still some more downside, but eventually maybe look at that one.
They want to know Shopify in the chat too, because you've talked Shopify on this show positively a lot in the
Look at
past. You
that.
still positive on Shopify?
Still positive on Shopify. I mean, if you want to do any direct-to-consumer business.com business, it's the name. I think that Magento, which is owned by Adobe, is still, it's not a play. It's not gaining any significant market share. Shopify continues to do pretty well. Longer term hold. Definitely a longer term hold.
What about Levi's, Ryan? This is one that I've been looking at, as a potential turnaround story as well.
It's got some momentum, but it's got a pretty big gap, if I remember to clear. I don't have a real call on it. I could certainly take a look at what their market share is looking like on some of these sites, but apologies. I'm not.
It's not sexy. It's not new. I mean, Levi's has been around for 100.
Well, they just
more than
teased.
100
They just teased a partnership with Beyonce. So that if that's not sexy, I don't know what
that
is.
sounds sexy.
Yeah.
I mean, I do think there are some interesting potential turnarounds. So like, I think what's happening at Gap is kind of interesting, right? So that CEO was flipped out, and he's starting to see some positive reaction. I think another one that's kind of interesting that had been basing for a long time is Ralph Lauren. Remember, there was a change of leadership there as well. I think, if you start to look,
that's come back.
Yeah, if you start to look in the payment space, I think Affirm's still interesting, really expensive, but I think it's interesting, especially with where that CEO came from. I think PayPal is very interesting for a potential turnaround. They're starting to see new market share. They've clearly got new marketing. I mean, if you've watched any NFL games over the last week or so, you've probably seen the new PayPal marketing push. So there's definitely some interesting spots. And the economy clearly looks pretty strong, so people are still spending. Adobe came out with their numbers. They said that they believe the holidays are going to be up 8% year over year. I think it's probably going to be rosier than that. I think it's going to be double digits.
Let's rapid fire here through a few symbols in the chat. If I missed any, throw them in there. Crocs. I didn't realize they made so many different shoes. Crocs, looks like you got some resistance here. Give us rapid fire here. Crocs.
Crocs, they are losing share on their top retail channels. So I'm not too excited about that name.
ON. I have to buy a pair of shoes. I see everyone wearing them. Wow, $50. Tell us about ON.
Yeah, I think it's at a pretty critical point right now. I think either it continues to accelerate forward or it bases back down in that 40 range, 45 and change range. The one worry I've got here on ON is the fact that you are seeing them everywhere, right? clearly anecdotal, but they're in Costco now, right? So they do push through Costco. Once you've lit up the Costco, you've effectively taken out all major retail channels that you've got. So I think the major growth is probably past. Now they need to come up with some other story. Stores, international, etc. They got to come up with some other story. Right now, they don't have a narrative beyond that.
There's so much separation because now they want to talk elf beauty. I mean, there's good retail and bad retail, and there's nothing in between. It's like stocks have been down 60, 70%, or they're at all-time highs. I'm like, it's like tough, like retail. You got to get the right, you got stock picker. That's why Ryan's here today, because we need the stock picking. Is elf going to turn around, or is elf over too?
Yeah, so elf to me is kind of like Celsius. Let's see it base and then maybe take a small position and then play it up in terms of increasing your position. Elf is still very strong in terms of sales and the placement, but everyone's scared of Ulta. Everyone's scared of Sephora slowing, so they believe that it's naturally going to impact Elf. And they've been trading at a premium for a long time. So.
What about, I mean, I know Adobe came out with their kind of report ahead of the holiday season. Do you foresee any companies or specific products that are going to heat up this year around the holidays?
In terms of products specifically tied to stocks,
or just in general, I mean, like what's going to be the hot? Because what made me think of it is last year that I got my aunt and uncle gave me a pair of On shoes for Christmas, and I was like, well, this year if they do that, I'll know they got them at Costco. So like, what's going to be the hot present this year?
I think beauty will continue to shift some of the wallet share. You know, I know we've been talking about the beautification of Instagram and people continuing to play itself out. I think, you know, as we continue to see stuff like Novo Nordisk and things like that continue to sell, I think that beauty play will continue to run. I think beyond that, I think you're going to see the non-traditional brands potentially that aren't nearly as popular. ALO will be very, very hot, but we won't see it play out, you know, much through public stocks.
All right, we've been on the line with Ryan Craver, Commerce Canal, our retail expert, reading the consumer. Basically, been talking Costco and Walmart for a while, and they have performed. Ryan, it's always fun having you on, and we'll be dialing you up again next quarter to get your input on the markets. We really appreciate your perspective, working with the companies directly, the advertising, seeing what they're selling, what they're not. Ryan Craver, Commerce Canal.
Thank you, gents. Have a great day.
All right, guys. Thank you to Ryan Craver over at Commerce Canal. Real quick, you know, I remembered while Ryan was talking, I did some boots on the ground reporting last night, and I don't know what's going on here, because I was at the AT&T store. It was absolutely packed with everyone wanting to upgrade to the new iPhone. But they're doing this deal. I didn't even get to do it last night because it was too busy, where I can trade in my iPhone 12 and basically get the new iPhone for free. So I don't know who's paying for that, whether it's on AT&T side, or on Apple side, or something. But you talk about, you know, I mean, that's zero inflation. I'm going to get a brand new iPhone for $0. It sounds too good to be true. I don't know what's going on, but I don't know who's like eating that in this scenario where the new iPhone is. Let me know in the chat if anyone's taking advantage of this like upgrade promo going on, because I couldn't believe it. But either way, everyone is upgrading to the new iPhone, but again, they're not paying for it. So I don't really know what to think about it.
See, the way they do it at Rogers rips everybody off, but they you know, just put it on your bill for the next 24 months. Sign a 2-year deal, we'll give you a new contract or new phone, and then they just jack your bill up by like the difference of it. So it's just on there. So I don't know, like read the fine print, I would say. I don't know, like again, maybe they do it different in the States. It's more competitive. You have more carriers, so maybe their competition. Basically, you got, you know, like this, you know, oligopoly happening up here between TELUS, Bell, and Rogers, and that's it. And Canada loves, you know, to have no competition. That's what we do up here: 6 banks and 3 phone carriers, basically. But I mean, I think you got to read the fine print on those.
No, okay. So you're saying that your actual like the carrier bill, like how much you pay for your wireless, is going to go up?
Yeah, and they're saying in the chat, they put it in your monthly payments. I think
No,
if you
okay.
read
So what it used to be where you got like a phone upgrade every 2 years, then you got some knocked off the phone. Now what they do is everything is just in monthly payments. So instead of the new iPhone being $1,000, it's like $30 a month for 2 years or whatever. But when I trade in my iPhone 12, what they're saying is that you basically get $30 off every month off the next 2 years. Like the way I was looking at it was like this would be completely free for me. The phone bill that I pay to AT&T for my wireless plan and data and stuff isn't going to go up at all.
Can you send the link to that? I'm just curious to read it myself. Yeah, send the link. I post it in the chat and I'll take it because the chat's challenging you a little bit here too.
Okay. Again, like I was in there and
maybe you found like the deal of all deals here.
I was really asking these questions and I don't think. All right, but while I'm pulling up that,
let's talk long. Let's talk
Southwest.
Yes, let's talk Southwest. Wow.
Again, we got to know when these companies speak, and we were on this one. I think you might have mentioned AB or somebody told me, that this was, they knew they were speaking, so I stayed away from Love, so I didn't get hurt because normally I get run over by this stuff because I didn't know they were speaking, and then boom, 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 and the things, up 6% in your face, and you're like, well, I didn't even know they were speaking. So important to know when they were speaking. What'd they say? Must have said something pretty good.
They raised revenue forecasts for this summer. And they do a $2.5 billion stock buyback. They are doing it in the pre-market. I know, Dennis, you don't like when I say that. I'm being facetious. But you are back at your recovery highs from Mr. Elliott. Is it Elliott's involved in this one? But you're back here. Really interesting area. This is such a huge move for Love on 271,000 shares. So if you're buying this off the hop, make sure you catch a solid bid. I would have wanted to see it. I don't even know if this thing can open over 30, but we'll see. You can see all the daily highs, 30.52, 30.58, 30.46. So there's a lot of daily highs in there, but still another 40 cents away from that level for LUV.
All right, wait. I found the thing here. So
he's really stuck.
I'm curious too.
It says the new iPhone 16 Pro on us guaranteed with eligible trade-in. So basically, up to $1,000 off. With
what's the? We got. I can't read. We got to really zoom in on that fine print.
Okay, let's see here. iPhone 16
Get you on the
Pro.
fine print.
Someone says you have to switch providers.
No, you don't. So someone in the chat just put it in here how I understood it. Chris, there is a payment for the phone for 2 years, but it is credited by the carrier, so you don't actually pay it unless you break the 24-month period. So basically, like this is how I understood it. That I go in, I give them my old iPhone. The new iPhone comes in 24 monthly installments, but those installments are paid for by my trade-in. And
see offer details. Click that.
Okay, let's see.
I actually had a clerk on the floor of the knife, and they had the exact same name, Chris Maldonado. I doubt it's the same person.
Up to $1,000 off on iPhone 16, up to $830 off after the 36-month billing credit. So 3 years, not even 2 years, 3 years. They're really getting you for 3 years. It's a way that they keep you a customer for 3 years. So this is all about customer retention here. Sign a contract.
Either way, I didn't stick around because there were so many people in there that I would have had to sit there and just wait for like 45 minutes before being helped. So I'm gonna go back.
Go back up. Go back up. I want to read this. Scroll up a little bit. Stop. Eligible plans. The offer requires a postpaid, unlimited voice and data plan starting at $75.99 a month plus taxes and fees before discounts. So they got to be a minimum of $76 a month for the next 36 months. So that's where the fine print where they try to get you a little bit. So obviously, that gives 0%, 36-month plan, monthly payments up to $45. So just read the fine print on all these offers. Read the fine print because $79.99 a month doesn't sound that cheap to me.
No, that's expensive. But if you're already on that plan, then
if you're on an expensive plan already, I guess, why not? Do it.
All right. Well, it's 9 a.m.
Somebody says
now.
they pay $25 a month. I know $80 a month US. I mean, I think I pay 80 Canadian a month, and you guys have more competition over there, so your prices are always cheaper. So it does sound expensive.
I'll see, because if I go in and they say, yeah, you'd have to upgrade your plan to do this, then I'm out. But if I'm already on that plan already, which I'm still on my family plan because it's cheaper to do it that way than to get my
Yeah,
individual.
the family pay for it. I know about that. But
You still paying? Are you still
The
paying for
family
your,
plan.
Are you still
I know.
paying
I'm
for your
on the other side of that too. Everybody in this household's on the family plan too.
Are you still paying for your daughter's phone bills, Joel?
yes.
Well, okay.
The family plan.
I'll defend them. I'll defend them because really, if you kick them off, it is like twice as much money. If anything, like I told my mom, I was like, I'll just start Venmoing you for my portion. I get my own, it's going to double. And she's like, oh, no, don't worry about it. Because I will say that's the one thing that my mom still pays for. I pay for my own car insurance, my car payments, my apartment, every single thing in my life. But the one thing my mom still handles is my phone bill, which I don't think it's that
Dennis, do both your kids have phones?
No, not with cellular service. They just have like our old iPhone, but they have Wi-Fi on. So we didn't give them cellular service. I told Spencer when he goes into high school.
Any big
I'll
stock?
short that right now.
You're gonna get one before that? He's gonna get it before that?
Yeah, seventh grade.
Grade 5, only 3 years away. All right.
7th grade. All right, that'll be a wrap on us today. I don't think we missed any big. I mean, we needed to hit love, but we hit that at the very end there. Other than that, I think
too. The hurricane trade, we did not talk much. I mean, if you're in that area, obviously where the hurricane, take your precautions. It looks like it's going to be bad. Could hit as a category 4. Generac ran up for a couple days. It's up here again this morning. It's a natural one you think of. URI is another stock too. And then the Lowe's and Home Depots. But one thing to consider is these stocks often run ahead of the event and sell off afterwards. So historically, they haven't been good buys on like when the hurricane's striking. It's like they actually sell off. It seems like they run up ahead and then, they sell off after. But, it's hard to say if that's going to happen in this case. But Generac was 140 4 days ago. 150. That's not a coincidence. The stock has been running up ahead of it. It is up here again this morning here. But I think the easy money may have been made already in Generac.
What's this hurricane called? Helene?
Yes. Yep.
Yeah.
Yep.
It's gonna be bad. Like it's actually like they projected 2 days ago it's gonna hit us maybe a 3 and it's gonna hit us a 4. So they're saying 15 to 20 foot storm surge. I mean, it sounds bad, like really bad. It's not like it's gonna graze Tampa, so it's not hitting like a major city, but that whole area there, I mean, doesn't sound good. And they're saying it could go in as far as like Atlanta, like like that it could hit. Not that's as a 4, but they said Atlanta could get like 50 to 60 mile per hour winds here from this, just the way it's coming in. So kind of scary. Like they never go in that far, but they're saying because it's hitting right there and that little spot is a 4, it could still be a 1 hitting in Atlanta. I don't know if that's ever happened.
I mean, I'm seeing that. I mean, some of the storm can get all the way up to Nashville, and you'll see.
Some of it scary.
Into St. Louis, but yeah, I mean, this looks like the danger zone down here in the Panhandle of Florida, Tallahassee. I think like Destin's around there. So if you're in this Florida, region, definitely, watch out there.
I mean, you got and what time? I think it's supposed to strike here later tonight, I believe, if I'm not mistaken. I don't know if they have the hours where it's supposed to hit, but I think it's later tonight. I know it's right down there, just cruising by like Tampa right now, but it's going to come up there. And Gulfport, my father-in-law's got a place in Gulfport, and it's already got some storm surge happening there a little bit, but it's not getting a direct hit. So there's going to be some damage.
Yeah, and this has this pocket, this high at least 70% of flash flooding all the way up here in like Tennessee near.
I never see it. You never see it that far.
No,
never.
No. All right.
No.
We've gone over today, but thank you to everyone who tuned in. Joel, who do we got coming on with us tomorrow?
Oh, we don't have to do hardly any prep tomorrow because we got Jay Woods coming on, Chief Global Strategist at Freedom Capital Markets. That guy can talk more than you, Dennis, and looking forward to it.
Jay's great.
Yeah, he is.
We got to get to New York and see Jay sometime.
Let's go. Road trip.
Yeah,
Let's go.
Let's
go.
See Jay.
All
Jay,
right.
we're coming.
Okay. All right. That's it for today, folks. Thanks for joining us.